Welcome to this session from GyanDhan. Today we're going to discuss really the increasing cost of education and how to fund that, and primarily how to plan for it and how to deal with the rising costs. I'm your host for the day. I'm Ankit Mehra, one of the co-founders at GyanDhan. Been on this journey with GyanDhan to simplify and ease access to higher education for the last 7 years now. In the last 7 years, we have helped over 10,000 students kind of get loans through our platform. And I think this is just the starting of our journey. So this really is how can we make higher education more accessible. As I said, the focus of today's call or webinar would really be just discussing what is driving this increasing cost of education, and then how do we deal with that. And before I get into it, really wanted to understand because that will determine a lot of how I would want to kind of have this session. I wanted to run a quick polls, and then we can start the session. All right, I'll give another 15 seconds before I close the poll. And folks, you should put on your stage the poll in case you want to jump in with the answers. At this point in time, it pretty much is handily most of us, at least in this session in time, are going this year. That is the vast majority of the folks. All right, I'll just do another poll before we close this. It's really just to understand which countries are you primarily targeting for folks who are going this year or who are targeting next year, like which is the that you're primarily looking at. Right. Cool. So this is a bit of a counterintuitive thing. We do have USA as the majority, but then there are almost equal number of people who have voted others. So would be interested to understand which countries it is. Is it Australia or is it some other countries that folks are targeting? But thanks a lot for giving that information. So the idea really is, I'll just quickly discuss. I have a few slides to run through, but I would encourage folks to just add questions because I would much rather spend more discussing questions that students might have or they might be facing right now. But to begin with, I'll just highlight two charts, which is something almost everyone has seen by now, but really just goes back to the increase in cost of education. So right now, what's happening in primarily and especially and in other countries as well is there is rampant inflation. So US is the inflation rate is at almost 40-year highs. It's touching almost 10% at this point in time. And just from a context perspective, US is historically, the Fed targets somewhere close to 2% as the acceptable inflation rate. So it's definitely way beyond the target range when it comes to US. And that's the same in other countries as well, that inflation is definitely increasing. Now, the impact that happens is your total expenditure increases. I mean, it's true for tuition expenses, it's true for all the expenses, right? In the US or in other developed countries, we take that for granted that there will be just a minor increase in inflation. And so as and when this shock kind of comes in, it's not really something people would have planned for. That's one of the reasons for there is another factor that is actually very, very critical, which is that there has been a currency depreciation, and the rupee reached the $80 mark, and this 10% inflation or 10% depreciation in the currency also increased the total cost of education for the Indian students, especially when it comes to the country. In other geographies, so far they have not really kind of been impacted by depreciation, but students targeting US definitely have been hit by the double whammy of inflation as well as the currency depreciation. Now, the currency the inflation, what does it result in? Is really it results in a tuition fee growth as well. So, in addition to your overall expenses, it also results in an increase in the tuition cost every year. And this year, we are seeing students who had gone last year, they are actually right now looking for additional loans for the costs. So, there are three drivers again: inflation, which is resulting in your living expenses, inflation, which is resulting in tuition expenses going up, and then the depreciation itself. And what we have seen really in the education inflation is it has really outpaced the overall inflation for students. So again, I was talking about 2% kind of a inflation historically in the US, but if you look at education inflation, that has definitely outpaced the consumer price inflation, the consumer price index that we talk about. So just to think of it in other ways is if something was worth 100 rupees yesterday and it's now worth 102, that is at an overall level, but probably the cost of education is more like 104 or 103. And that has been a consistent trend in the last few decades now, right? And that has been a big cause of concern as well in some circles. But the reality is that there has been an inflation. And so for students planning to go next year or even this year, there is something that they have to keep in mind, that there will be inflationary pressure from an education fees perspective. The problem statement or the question really that, hey, education is costs are increasing. Now, before I get into the management of expenses and later on in terms of what can students do who are, so there was a participant who is already in the destination country. So what can they do if they are if they need additional funding? I'll get to that. But the first thing just to highlight here before I get into the management part of it is planning. First important bit really is you need to be cognizant that depreciation is not a one-time event or it's not something that is unexpected. What is unexpected right now is definitely the inflation. It's well explained. There are reasons that economists will put out as to why they're having high inflation. But typically you would not expect a 10% kind of an inflation in the US. Or at least that has not been the norm in the last 3 decades or so. So that has been an unexpected turn, but depreciation is definitely not an unexpected thing. So students should budget for a gradual depreciation every year. And why is, if I go back to the previous slides, if you look at it, last 5 years, the currency has depreciated at an average of almost 4.5% every year. Now what happens is sometimes you see sudden spikes, and that's when suddenly you will see in the news articles around going abroad is expensive or students are concerned and so on and so forth. Frankly speaking, it should not concern students, but they should plan for it in advance. So if you're saying that I have to plan my education, budgeting a 4.5 to 5.5% depreciation in the currency on an annual basis, I think that is the way to go, rather than saying, hey, okay, 100 year and 100,000 next year, multiply both by 80. That should not really be the case. I don't know now will the rupee be at 78 or will the rupee be at 82. But if I have budgeted for a 4.5% or let's say 5% kind of inflation, I at least know my safety cushion. How much do I need in extra funds next year? I am not met with a surprise. So that is something in the last 7 years of at least running, we have seen that is something we keep on telling students, and we see students miss out on that multiple times. And the biggest issue is it hurts you when you are actually studying. It hurts you when you should be focusing on your studies and getting the job, but you're now trying to figure out how to that extra 2 lakhs or 4 lakhs or 5 lakhs in expenses. So you should not really be in that position, and you should be planning for it accordingly. Quickly talking about managing expenses, so it's pretty much a cut and dry approach that, and that's something everyone would be familiar. So just restating the obvious, but really the key thing is you need to make a differentiation between your needs and your wants. There are certain things which will definitely be very, very critical, and you need those. And certain things are kind of discretionary expenses, and you need to realize that discretionary expenses are something you, depending on your standing or depending on the need at that point in time. Again, kind of sticking to the same report, I'll not go through this list. You guys can look at the list primarily, but the key thing is real, which is monthly budget. And I said plan for the next year. So trying to look at what your annual budget is, how much would you need next year, assuming a 5% inflation, assuming let's say a 2%, 3% depreciation. Sorry, a 2-3% inflation and 4.5 to 5% of depreciation. What would your requirements be for the next year, for the third year if you're going for an undergrad course? So that is how you should ideally be planning, even when you're looking for fund education right off the bat. How much loan do you need? But these are all sub-bullet points in terms of what could be done. I wouldn't venture out and say all the way to saying avoid eating out, because I've stayed in the US and I've studied in Spain as well. That's part of socializing, and that's part of your networking. So it's not necessarily when we write here avoid eating out, it's that cook and or eat ramen, but it's really a case of you need to do everything in moderation. And then obviously the last part is really around earn while studying, and that's something that's kind of important, and that helps a lot of students, and we see a lot of Indian students definitely do that. I'll just quickly go to the needs versus slide once again. Again, given this is a relatively smaller crowd. So Damini, I mean, it's just really just try to clearly identify. It's one of those things which is an individual choice also at times, that what is a need for a person versus what is a want. But at least being clear at the very outset of what my needs are and what my wants are, and spelling those out is very, very important. Because at times we confuse, and that can cause planning issues. And this is just not for study abroad, it's pretty much across the board. This is just typical financial planning for your life itself. The earn while studying is specific to education and specific to your higher education plans. And again, this will vary depending on the country you're going to, what other requirements are. Like some programs can be quite exhaustive and kind of demanding. You might not get a chance to even work part-time. But if you can to work part-time or do some kind of an internship and assistantship, that's always it always helps you to fill your wants at that point in time, right? If once it is done, you can still be with what has happened this year, that you had, which was an unexpected inflation. At that point in time, how do we advantage of funds? The first thing is really, obviously, you got to rebalance your budget. Look at again very clearly, can I move certain things, reclassify certain things to needs versus wants? Was I being too generous? But the other thing really is you can apply for a loan. And the way top-up loans will work is, so once you're going abroad, and because most of the folks are going or will be going next year, so typically what will happen is, again, I'll figure out what your total is, assuming inflation, depreciation. Say how much are you going to willing to spend pocket and what is the remaining amount that you want to bridge through a loan. After that, if you get an unexpected requirement, at that point in time, you can typically go back to your lender and explore an option of can they provide an additional financing or not. Historically, this has been something that has been a bit challenging because of multiple regulations, because of the whole issues around banks or NBFCs don't even understand or the process is so cumbersome when you're already in India that if you're then it becomes even more cumbersome. So at GyanDhan, what we've done right now is we already have our own NBFC as well to be in the marketplace. So we're taking a step back at the outset that our focus was equalizing or simplifying access to higher education. So the way we work is we are a marketplace for education loans. So we have banks and NBFCs that partner with us to provide students the best option. But in addition to that, because we realized that this was pretty much broken at multiple, so last year we did get our license as well, and there are areas where we use on our own now. One such segment that we identified was this whole top-up loan option, which is really you need that extra funding to be able to bridge your gap between what is required versus what you can fund through the existing sources. Now, this is something we've already this year we've gotten a bunch of applications and we have already done for in the US predominantly and a couple of cases as well. Here you can apply for loans up to 10 lakhs. Typically, this is a digital process. There will be a requirement that it will take 3 to 5 business days. Typically the way it will work is you'll fill in an online app. Post that, the underwriter, the kind of credit evaluation will happen. If there is any additional document, then we'll get on a call, we'll get on a mail chain, and we'll tell you that these are the additional set of documents. Once those are provided, then you'll get the final results in terms of what's the amount that has been sanctioned and what could be the interest. So that is really typically how it works. In addition to that, we're also looking at working with your existing lenders. So if you've taken a loan from ABC Bank or ABC NBFC, that is our partner, and are looking to top it up, we can work with them as well. The other option really is around pretty much balance transfer. So I'll come to that. Actually, let me take that. So your question is any guarantee required for top-up loan? Let me classify that. We will have, if you're taking a loan from GyanDhan, we will require a co-op. So your co-op will be there on the loan, but we will not require any collateral at this point in time. The loans we have done are secured loans when we have a co-op. I hope your question. We've had cases, a couple of cases where students have actually asked us if we can provide a secured security, but that is not our default product at this point in time. Our default product at this point in time is really an unsecured loan. So the other option is really around education loan balance transfer. This will be more relevant to students in the destination country, have either graduated or are in the process of graduating. What that means is you can transfer education loan to another lender and get a better rate. So while not getting any other benefit, but the big benefit you're getting is probably a percentage or maybe a couple of points difference on the interest rate itself, which can be huge savings for you. So any non-secured loan available with non-financial co-applicant like Avance. So Abhishek, I'll caveat it with the fact that when we are doing these loans, we are providing loan. When I said we are looking for a co-applicant, necessarily mean that we are looking for a financial co-applicant. We will evaluate the profiles, and as I said, when we get back in terms of hey, these are the additional requirements, because basis the profile. So I'll tell you one thing is essentially there is no one solution for everyone. which is why we have still continued to be a marketplace, because we don't think that GyanDhan NBFC is the only answer. There are different profiles, and there are different products that will meet their requirements. So the GyanDhan top-up loan itself is a place where we are trying to assess the student profile and trying to understand whether they will be in a position to repay or not. And that is what is that is how we decide who the co-applicant could really be. So, Divakar, your question is what kind of tie-up you have with SBI works and what is the interest rate. So quickly, just talking about the tie-up with SBI. So as just a while back, we have tie-ups with a bunch of lenders. It's all mentioned on our website itself. SBI is one of our primary partners in this education loan journey. We are an empaneled education loan counselor for or loan provider for SBI. So what that means really is, Divakar, is we work with SBI to help students get the loans for study abroad under the Global Advantage program. So think of it as, instead of going to a branch, you are filling a form online at GyanDhan, and then we identify which is the best branch that might be able to deal with your case in the best possible fashion. In addition to that, in different cities in the country, we also have a document pickup service. What that means really is, let's say if you are in Delhi, I'm in Delhi right now, so I'll take Delhi as an example. If you're in Delhi, you don't really have to go to any SBI branch. A will come to your house, collect the documents, check if the documents are in order, and then process the loan through a specialized center at SBI. Now what that results in is a faster processing time, clarity on the documents, so you don't have to make multiple visits to SBI to even figure out, hey, are my documents even incorrect or not, right? Because our guy is doing all the heavy lifting there, and because of their experience, they don't have to come to you 20 different times. They have a clarity on what works, what does not work, and they can tell you upfront in terms of, hey, this is how your application should be, and then they get the loan processed. And once the loan has been approved, then you will go to an SBI branch to do your KYC per se, or do the account opening formalities. That is really how the tie-up with SBI works. We do not charge any fees from the student for this tie-up or for any other tie-up we have in any of the banks in the study abroad space. We get paid by the lenders themselves. So any fees that you pay will be to the bank directly. You're not supposed to pay us. And the interest rates are exactly the interest rates that you would get if you had gone to the bank directly. In the case of HDFCs and some private banks, we might even be able to help you negotiate rates, because there is no fixed rate there necessarily. There are guideline rates, and depending on your profile, we can champion your case to get a better rate, higher loan amount. But in SBI, the rate is fixed. So that is so there is no differentiation, or we can't get you a better rate per se, but there will be no increase in costs when it comes to loans. So I hope that answers your question. As far as the product is concerned, so SBI only offers loans. The interest rate typically is linked to the lending rate. Right now, the interest rate is at 8.5%, and there is a half a percent discount for the girl child. All right, Abhishek, and I have a couple of slides, but I'll discuss from Abhishek. What to change college after reaching USA? Which loan services? Abhishek, we've actually done this quite a few times. So first of all, I'll say, there isn't really necessarily a loan service that supports this. These are more exception cases. And I remember 4 years back when we did our first case like this, wherein the student had taken a loan from one of the public sector banks, and they had gone to Canada. And after landing in Canada, they changed their course. and the public sector bank absolutely had no clue in terms of how is this even possible. So we had to kind of work with the central office and kind of explain that, hey, I mean, this is something that is new to you because you guys are not used to it, but there are cases which when students do this. So in all such cases, when the loan is done through GyanDhan, our kind of assurance to the customer is we are here for the entire life. So just आपका loan हो गया and we are kind of done. Even if you have any issues, whether it be around repayments, whether it be around unnecessary fees being charged or anything, we'll be here to help answer your queries through the partners. And the partners are not responding, we'll hold them accountable for it. So the answer is we've done this in the past as well. This is not a typical service necessarily, but this is one of those cases where exceptions do come in, and then our team will take that into account. The only thing I may mention is, even though we do kind of sensitize our partners in terms of, hey, there is a requirement like this, it's not something like it's not a very easy kind of offering wherein, hey, you tell me tomorrow I'm changing from Arizona State to TAMU and the loan changes day after tomorrow. Right? It does take some time, but having said that, it does happen, and we've done these in the past. And the last thing would be, I mean, the worst thing, the last option that you would have is essentially, if you're not getting it through a lender, you can do an educational balance transfer and then take it from another lender and move to TAMU. That would be the other option. Though I wouldn't really necessarily advise that, but that's really the backup option per se. Cool. Next slide. This is really one of the last slides. It's typically just trying to understand USD loans versus INR loans. So what's happened in the last 1 month is I've had conversations with a bunch of reporters who've been reaching out to us saying, hey, has this really changed students' outlook towards studies in the US? And we've told them that we've not really seen that. And to be honest, it should not really change students' outlook as well, because these are like fluctuations over the longer term. So whether there is an incoming recession or not, that should not necessarily, you can't really time the market. So if people are basing their decision on that, then there is something fundamentally wrong happening. And then the other argument I also hear is at times is, hey, if the rupee is depreciating, then shouldn't people take a loan from the US itself? So I think there is some merit to that. But the question really is, are you taking a short-term loan or are you taking a long-term loan? Because the key thing is, think about it, the students who just graduated right now, if they've taken a US dollar, if they had taken a US dollar loan, they are still repaying in US dollars. But those of them who had taken an Indian rupee loan are now able to pay their loan much faster. Right? So what really that results in is, while the interest rate might have looked higher, their actual overall cost of education is lower because of the depreciation. So the answer really is, it's not really comparing a 9% to an 11%, 9% USD to an 11% INR and saying 9% is cheaper. That is a mistake. Frankly speaking, I've seen even MBA aspirants do. I won't talk about others. MBA aspirants with finance backgrounds, and typically the moment of realization ends up being in moments like this when you have sudden depreciation. When students come to us and say, hey, can I refinance my loan? I mean, is there an option? Because I'm suddenly seeing that this is actually pretty costly. But those options are not as kind of prevalent at this point in time in terms of refinancing a US dollar loan to an Indian loan. That is still kind of a bit dicey. But the kind of slide just talks about if you've taken a loan in 2012 and kind of just talks about currency depreciation 2012 to 2022. In the previous slides, I'd shown 2000 in the last 5 years. So the idea is, rule of thumb, as I said, is 5% roughly, and the equivalent rule of thumb I typically tell students is add 4.5 to 5.5 depending on your risk appetite. Add 4.5 to 5.5 on a US dollar loan. That is actually giving you the equivalent Indian rupee loan interest rate. and that is how you should compare two loans. So if you're taking a short-term loan, so if you go to the US or maybe the Euroland, wherever, and now you want a 6-month loan, personal loan, or you want to buy a laptop in installments in 6 months or 12 months, there you should probably look at 9% versus 11%, because in 1 year, no one can reasonably predict, and I'll go back to the rupee depreciation slide, no one can reasonably predict where the rupee will be versus a dollar. There might be phases where it appreciates, there might be phases where it depreciates. But in the longer term, depreciation will happen as long as there is an interest rate differential the way we currently have. And so the right answer really is to kind of do your assessment and kind of be cognizant that even if you're taking a US dollar loan, you need to be cognizant of what you're buying. So Devakar's question, what are collateral items? Example, LIC policies and NSE certificates will be part of that, or only land or home, etc. So Devakar, there are a bunch of collateral options, but typically, at least what we have seen, I would say 95 to 98%. I'll have to check the exact numbers, but reasonably safe to say 95 to 98% of the cases will be cases wherein students provide the land or the home or FDs as collateral. So these are the typical, outside of home, land, FDs is the only other collateral we have seen predominantly. The key thing is insurance policies, the surrender value of the insurance policies does count as a collateral for some lenders, but typically the surrender value of the policies itself is quite low. So that doesn't really necessarily translate into a large sum of money in most cases. And just talking about other collateral options, there people do ask at times, hey, will shares be available, will be eligible or not? So the answer there is no, shares are not accepted as a valid collateral. So just to summarize, if for students who are for the couple of folks who are already in the destination country, if you're looking for a top-up loan, please do get in touch with us, and our team can kind of take the process forward. And for the folks going this year or the next year, I would strongly advise to kind of plan for a certain amount of depreciation and for a certain amount of inflation when you're planning your higher education. All right, so gold bonds, Divakar, to be honest, I'll have to check that. I'm not aware, I'm not sure. Some government bonds are accepted, but I will have to check really around the sovereign gold bonds, whether they are accepted or not. So I'll take that as a feedback, and we'll get back to you on the gold bonds bit. So I wouldn't want to kind of give you some false information at this point in time. Abhishek says, if I want to show some amount of loan amount as family saving for I-20 and visa, is it possible? Abhishek, can you kind of clarify that? So are you saying that for a I-20 and visa, you want to show some amount as loan and some family savings, or what? I'm not really clear about the question. So clarity on that will help. Aparna says, what are the conditions for non-collateral loan and the person with no blood relationship can become a guarantor? So Aparna, as far as the non-collateral loan is concerned, what are the conditions? Typically, there are two kinds of conditions that would be eligible. So typically what any lender is trying to understand is, one is, what is the repayment capacity? Now, repayment capacity could be in terms of, hey, what kind of course are you going to, and what would be the employability from that course? So what kind of salaries will you get, and what is the probability you will get a job in the first place? And trying to use that as a input to assess who should get a loan or not. Now, some lenders might have sophisticated models, some lenders might use kind of other techniques. Like at GyanDhan, we really built out an employability model. That's how really we started the thing. And we said that, hey, given a profile, we can comfortably predict what kind of salary ranges will some individual get once they complete their masters. Right, so that you can use really to make loan offers. The other thing that lenders will look at when making these non-collateral loans is really the if it's not really about the if they have some less comfort, if I may say so, on the repayment capacity, then they will look at the repayment capacity of the co-applicant. So those would be the predominantly two conditions. As far as person with no blood relationship can become a guarantor or not, I would say that as far as secured loans is concerned, that does happen. We've seen those cases. As far as non-collateral loan is concerned, that is not necessarily the case. There will have to be someone who has to be a blood relative, who will be a co-applicant. Then you typically can add another co-applicant who might be someone else who might be willing to come on the loan. So you might have two co-applicants, and both of them together are assessed when making the final loan decision. Okay, so Divakar, your question. Divakar's question is: during visa purposes, do we need to show source of funding? Yes, I mean that is definitely a question that will be asked of you, because at the end of the day, anyone would want to understand that how are you going to fund your education. Because the last thing even the visa office wants to know is, or wants to be, they want to be cautious about the fact that you don't go for a 2-year program and you only figured out the first 6 months of your stay. Right, that's a definite issue, right? In terms of that is a seat that someone else could have gotten, and plus that is a risk as well. So that is definitely something that they will look at it. Sorry, I missed Damini's question. Can you suggest how to use Forex card diligently? Is it preferable to take prepaid debit Forex card or INR based cards based on the current conversion rates? So Damini, I'll do a shameless plug. I mean, we do have a couple of partnerships here, and we'll send the notice kind of email as a follow-up. We can send that as well. But the idea really is, I don't think. I mean, so typically today, what happens is you already get an education loan, and you can use the proceeds from education loan to top up your debit cards or kind of prepaid cards per se, right? So I don't think necessarily there is a case of, hey, I need to lock in the rates at this point in time. I don't think that again goes back to, I don't know how rates will pan out in the next 6 months or 12 months. We can sit here and we can prophesize all we want, but no one amongst us knows for sure, right? Similar to kind of a few days back, there was 2 conflicting reports. Someone saying the crude will go to 70, someone saying the crude will go to 150, both of them being economists, right? I mean, both of them are very well-credentialed people, right? So it's anyone's guess in many times, but the idea really is what you should look for when you talk about the word diligently is really what is the cost of conversion, because that is the one factor wherein students get hit a lot, wherein you might take a Forex card from ABC player. So the way Forex cards work is, so the way any kind of currency conversion will work is, what is the interbank conversion rate at this point in time? If it is 79.86 to a dollar, and I'm talking about dollars for example, if you go to a kind of either Wise or some other player, you will not get 79.86. There will be some costs. Now, those costs might be hidden, those costs might be clear. But the idea is you might get anywhere from if 79.36 is the current rate, you might get anywhere from 79.56, let's say, to all the way to 83, right? So that is the magnitude of difference you can actually see when you're doing the currency conversion. And that is something you guys have to really look for in terms of if you're opting for a vendor what is the conversion rate that they're offering, what is the markup that they offer on the conversion rate. And the other thing you need to be clear here is some players, what they do is they, in the past, that has been a thing that has happened, is some players will say, hey, we offer the interbank rate or we don't offer any markup. But what they have is they have created a new benchmark of their own. So if the benchmark is interbank conversion rate, they might call their benchmark something else. And yes, they don't charge a markup on top of that, but that markup is decided by them. But that conversion rate itself might be determined by them, right? So that is something people need to be careful about, and that is what you need to look at more than saying, hey, let me lock in the rates right now. How do you foresee the recession in US? Will it have impact on jobs? Yeah, this is another question I've discussed with a lot of reporters in the last a month or so. So the first thing is we don't know when the recession is coming. Almost everyone agrees that there will be a recession coming anytime soon because we are, except for the COVID-induced short-term blip, we haven't really witnessed recession since the 2007-8 time. Right, so we are due a recession probably. By some definitions, US will already be in a recession, but that will be by some definitions if you just take 2 negative quarters of GDP growth as the benchmark. Right, but the key thing really at this point in time, what is confounding is if we are in a recession, then what's confounding is the job unemployment rate at 3.5%, or there was a chart yesterday around all the jobs lost during the pandemic have been recovered by now, and so on and so forth. So the key thing is, as and when the recession comes, it will probably be unique or very different this time around than the prior recessions. One thing for sure, it will have impact on jobs. There is no denying that. But the key thing to understand here is what kind of sectors will it impact and what will the impact be. So I'd encourage folks to look at that graph online. There is this graph which shows that all the jobs lost in the COVID pandemic in the US have been recovered, but then there's a wonderful chart that talks about where the jobs have been lost of that delta. Where is this coming from? And there you see that almost, I think, if memory serves me right, 1 million jobs were added in the IT sector, and almost a million jobs were lost in the food and transportation sector, if I remember correctly. Right. So it's really a case of, it's not necessarily that hey, number of jobs have gone down. It's really a case of distribution. And this reminds me another. So what will happen is there will be an impact on jobs. We are already seeing there was a startup frenzy which has died down to some extent in the US, and we've also seen that there is significant curtailment, and we've even the Google CEO's comment this week was around productivity and kind of too many employees and less work and so on and so forth. So there are people are cutting down on job openings, but the way I look at it is what will happen is, number one, there will be a moderation in the runaway salary increases, the wage increases. There will be moderation on that front. The other thing is, let's say if you are a student targeting the US, you need to think more in terms of not just the Mang or whatever we may want to call the acronym. Those companies are the target companies. So for folks who are familiar with Lambda School or Bloomtech, their CEO kind of had a tweet a few weeks back, which I like, which he said that they've seen more graduates from the Lambda Bloomtech school join traditional companies who are looking to get digitized, because digitization is happening. Advent of tech, or kind of expansion of tech in every sector, is happening. The key thing is, you might not have as many openings in the man companies, but can you look for options in non-traditional companies per se, non-traditional tech companies? So that would be my suggestion. But no one can forecast a recession, and I don't think we should plan anything. We should be aware, and we should have a contingency plan. But I don't think we can time the markets per se when it comes to recession. Similar to we can't time when we go, which will be the best time. Okay. So Abhishek says 50 lakhs as savings, 30 lakhs as loan. Can I show 10 lakh of loan amount as saving, and also I want to show so Abhishek, I'll give you my personal advice here again, and I'm just saying caveating it with my personal because I'm just trying to kind of remove the GyanDhan picture from here or any lender affiliation per se here. I think it's better to just be honest about it because there is a possibility of so you could take 10 lakh from, so you could get a loan sanction of 35 lakhs and then you could say okay अब मैं 10 lakh cut, let me take a 10 lakh ka disbursal and I'll keep that in my bank account and I'll show that as savings. But the issue is if the visa officer gets to know or asks you a question and you stumble and they figure out that hey, this is something you've just drawn down on the loan and you're just trying to game the system, that will probably hurt your visa chances more than anything else. So again, I would advise you to, I would encourage you to talk to other folks, but this is something that I've been asked multiple times again in the last 7 years. This is one thing where my answer is very, very clear that I would not want to go down that route. Frankly speaking, even as a lender, when people ask us, I just tell them, hey, you should not be doing this because yes, the moment you take 10 lakh, we get paid interest on that. So it's great for us, but it might not be great for you. So my suggestion would be just be clear about it. And most of the visa officers across different geographies are clear on that. Yeah, that's something you can definitely do. Savings from other family members. That's definitely perfectly acceptable. That hey, I mean, because at the end of the day, they're just trying to figure out a way for, hey, can you fund the education or not, or will you be kind of hit suddenly with a lack of funds? So if I can show that, hey, yeah, my mom can help me, my dad can help me, and kind of my uncle can help me, fair enough. Or I have a property which we could sell at some point in time. Those are things definitely that will make sense. So Divakar, I think work to go on our own funds are better to take loan to get tax benefits. I think purely because of the tax benefits itself, I would advise people to take a loan. Because at the end of the day, if let's say you have an applicant and they are in the highest income earning brackets, or once you graduate, you are repaying the loan and you are in the highest income earning bracket. So effectively, if you have taken a loan from one of the Indian banks, you are getting a Section 80 benefit, which is effectively almost a 33% discount on your interest rate. So I would definitely encourage people to take loans purely because of that, if not for any other reasons. There are other reasons as well why I kind of recommend that, but that is definitely one of the big reasons. Having said that, I definitely think that there is a healthy mix you should do in terms of your own funds and loans. And more importantly, you should have that planning done properly, that what if X happens or what if Y happens, will I be able to repay the debt or not? Because that can have because lack of planning can have a significant impact on your financial future, right? So that is definitely important. Yeah, so Abhishek, at least in my experience when I have seen students, so it's not, so when I say about property, definitely if you say, hey, my family lives in um, 95, fuck it, and that is our property, that is what we are going to sell. That's definitely not, doesn't make sense, right? Because it's not necessarily, one is it's not liquid, the second thing is that's your residence and you're not going to sell that residence, right? But if I have, let's say, two other houses or some plot of land somewhere, right? I mean, thing is, I would have sold it right now at whatever rate and gotten the cash. I'm just keeping it as a separate thing, right? So that is really what you can definitely show in terms of the visa office. And again, the way it shows is that there are different ways. Typically, you will get a certification of from the CA, from a CA, in terms of what your net funds are like. So it can give you some documentation talking about, hey, this is the assessment of the property and so on and so forth. So there are ways you can kind of create the document to show that as a valid proof. But yes, I mean, if you're saying that my primary residence is my source of funding this education, yeah, that might be a concern for sure. Though theoretically, I mean, theoretically it should not be. Something. Yeah. So Aparna, so I'll tell you. And right now, obviously, Australia has not recovered as yet from the COVID thing. So hopefully next year, by next year, it kind of is back on the map. I think I now realize which is the fourth in the others, because up until 2 years ago, Australia was definitely right up there, and then in the last 2 years, it's really fallen off the cliff because of the COVID thing. But to your question around that amount should be in your account 6 months before your visa process. So I think this is not really necessarily. I'll tell you the genesis of this all, and then you guys can make your conclusion. So what was happening at some point in time was this entire thing. What I think Abhishek had asked, right, around showing funds from loans. So what was happening was, and today we do get requests from students who say that आप लोन दे दो 3 दिन के लिए. So you give me a loan for 3 days, I'll put the money in my account, I will show to the visa office, I'll get my visa done, and then I'll repay the loan. So there were folks who were doing that because they're saying, hey, I'll use my black money to kind of fund my education. But that creates a concern for the visa office as well, for the destination country, in terms of, hey, will you be able to pay for your education or not? So there was this entire side industry that was operating wherein you could get 2 days loan, 3 days loans, because if you have to just show one proof, one bank statement which just says, hey, what is my bank balance as of 6th of August? So 6th of August, I'll take a 30 lakh loan from Aparna, put that in my bank account, get the date report, show it to the visa office, and tomorrow I'll give 30 lakhs back to Aparna. So then the visa officers in different geographies said, hey, I mean, it doesn't make sense. We know what's happening. So now let's increase that limit from 1 day or 3 days to show me a month statement or show me 6 months. Right? Because if you take it for 6 months, then you're paying for that 6 months per se. So again, Aparna, it's not necessarily like from apart, because what was happening was, when I said side industry, these are not official loans as well. These were cases, people who had taken informal loans just for showing certain things. Right, so that is the concern that the visa officers typically had. But yes, they will require certain amount of flow in your savings account, depending on every geography that shows out your savings account. But again, any and all agencies understand this. I mean, why would someone want to keep 20 lakhs or 30 lakhs just in the savings account, right? So people are not irrational. I think they are just trying to understand, are you trying to game the system, or are you doing a false misrepresentation more than anything else? In some countries, like if you're going to Germany or going to Canada, they explicitly ask you for a block account, right? Because they say, hey, I want the funds already transferred. So these are just ways to kind of ensure that things are being done right, rather than some fudging along the way, more than anything else. Um, so Abhishek, I'm guessing Kolkata is your primary address. If that is the case, yes, you should kind of apply putting in Kolkata address as the primary address, and you can say, hey, I mean, we have another property in Mumbai, and that is, I mean, your funds. As I said, if you're getting a document from, let's say, a CA, in that document you will have the kind of the property value of the that investment mentioned. All right. Cool. So, if there are any last questions, happy to answer for stay around for another couple of minutes because we are already running out of time. We have 4 minutes left in this session. But just to recap, I think if I had to summarize, it would really be just planning, 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 and then if things don't come up, kind of happen according to plan, then GyanDhan is here to help you, whether it be through a top-up loan, whether it be to kind of reduce your burden by looking at a balance transfer of your loan, and yeah, feel free to reach out to us at contact@gyandhan.com. All right. Thanks, guys. Do share your feedback if any, and the question on gold loans, we'll just get back to you. Thank you.